Okay, we don't have the screen today, so, but there were 2 slides in the miscellaneous that we didn't get over after receding threw us all under the bus. So I just want to touch on those topics because that was something we've had questions on. The first one is on the community corrections grant, and I swore I would never do community crossings and community corrections in the same time, but here we are. We've had a lot of questions about that. One of the things that has changed, if you're not aware, is that the director over the community corrections grant left, Debbie Braun. She is no longer there. They have an interim director right now. I don't know when they're going to get that replacement in. I was quite proud of myself for sitting down with Debbie and Lucas and ironing all of this out to make sure that we all agreed on what procedures you needed and how we were supposed to do it. And new direction is taking it in new directions. So we're just going to have to be flexible and do our best with that. But some of the things that Liz, the interim director, had brought to me, and some of the things I've gotten from the counties on that is one of the big things we wanted to point out, and I highlighted on this slide in here, and also I did this presentation last fall, so there are more slides on this if you want to go back and look at that. When you get the letter, the grant agreement, the application, unless they've changed it, what I was told was the auditor has to sign that. They don't want the community corrections director signing it. They don't want anyone else signing it. They want the auditor to sign it so they know you have seen it. And as I said at the time, when you sign it, make a copy of it for your records. If you have any issues, you have that copy there, okay? So that's the number one hint. Within that agreement, because they, the original grant was just community corrections. There was a grant, there was project income. We went forward with that. What has happened is through legislation, they've expanded it. They want that interaction with the drug courts, the problem-solving courts, probation, deferral agreements. They want all of them pulling together in a county-wide approach to deter crime, to make our community a little bit better to live in. And in doing that, they've expanded this grant program. So there is still the community corrections grant. One of the things they did last year is they pulled out juvenile. So you now have community corrections adult and you have community corrections juvenile, and the people that are overseeing the adult are not the same that are overseeing the juvenile. So those two now need to be kept separate. Then there is a potential of other grants that you can receive, and I listed them on the slide. Your probation department can receive a grant, your prosecutor can receive a grant for their diversion program, and your courts can receive, either your alcohol and drug service or another problem-solving court can also receive a grant. When you get that letter, that grant agreement that I told you to copy, it will tell you your county is awarded X number of dollars. Of that X number of dollars, this amount belongs to this amount, program. They're not user-friendly for auditors. I did discuss this with them. I think they could be more, but they're not, so we're going to have to deal with it. When they send you they give you 25% up front and the first 1/12 of the first grant, they don't break it down for you. They just give you the amount, and you've got to sit down there and then take the percentages and go, this is adult community corrections, this is juvenile, or any other projects that you have. I did put some slides in that presentation last fall to show you kind of a spreadsheet, kind of how you can do that. So once you figure it for 1 month, you just carry it forward. It's not going to vary. You can just carry it forward so you know what lines to put that revenue or what funds to put that in. Each project within that grant needs a separate fund because each project is separate. They're going to have a different director over it, even though it all comes through the advisory board and then through Department of Corrections for approval. Each one is going to have a different budget, so they have to have different grants. And I know that's a headache, but it's the only way they can track those separately. Yes, Julie?
Oh, God. How did you know?
I see.
Okay. Can we make departments under the fund? Community Corrections Fund? Or are you giving us new numbers?
We are not going to take exception to you having departments under that as long as you are able to track each project, beginning balance, receipts, disbursements, ending balance separate, and keep them separate all the way through. They would prefer you do different grants, but as far as an audit exception, we're not going to take it, but you have to be able to track them separately because the reports are done separately.
Because a lot of the departments give you a cash balance for each. It'll just tell you your total revenue. It'll tell you the different revenues and the different expenditures, but then you have to calculate the ending balance based on that. You would manually have to calculate that. But does it give the ending cash balance for each department? Most
Can we all
don't.
share in the conversation?
I was just warning, on the fund, if you have one community corrections fund and you do departmentalize those, I was just pointing out that a lot of the systems won't give you a cash balance for each of the departments. They'll give you total revenues for that department, they'll give you total expenses for that department, but it doesn't say Department 1's cash balances, Department 2's cash balances. So if your system does not give you a separate cash balance for each of those departments, you will manually have to calculate that based on beginning balance, what we received for the year, what we dispersed, and then the ending balance.
And remember, these grants run July 1st to June, so the middle of the year,
Yeah.
when your funds are ending and you're starting over again, you've got to have those balances going for the next 6 months so they know they can track what money they have left.
Do you see any issues in the reporting process for our grant procedures? Listing, it's one grant, and we're listing it multiple times. Do you foresee any problems with that?
This is not a federal grant. This is a state grant. So you will put it in your, it's not something you're going to put in your CFA because it's not federal money. This is all state money. So it shouldn't be an issue for that.
Well, in each of the funds, putting it in, when you say putting it in several times, they shouldn't all just be called community corrections. They should be community corrections adult, community corrections juvenile, community corrections prosecutor. So you want to name in each of those funds individually to that program. Did we have another question?
Do the funds have to be established by the commissioner?
No, grant funds don't. Local home rule funds do.
Is that current now, or is it for the next grant that we have to separate it?
It started in 17. It started with these 17 ones, yes.
While we're on the topic of state grants, in the chart of accounts documents you gave us yesterday, or we went over yesterday, the state grant numbers that are listed, the range that we can use is 9,100 to 9,199. We're running out of numbers. Can we expand beyond 9,199?
Yes.
Okay. I just wanted to make sure because it was in your instructions
If you
that way.
have dormant grants, you can reuse numbers as well. If you're not
okay.
active, but if you need more numbers, you can
Yeah,
add
we
those.
get a lot of state grants, so I just want to make sure.
Martha had a question, and I think Debbie had a question.
So when the money comes in, or when we start the July 1 new year, the council has to approve all of those budgets, do they not, in their meeting as we go forward? Okay.
Yeah. That was something that shocked Debbie when we talked about it. The statute specifically says the council will appropriate this money. I don't know why they chose that because really you've got a grant budget and that's how they have to pay it. But the statute says it has to be appropriated. You can't spend it any different than the grant budget, so they're really just rubber stamping that through. But I think just to make sure that you guys know that that budget's in place in the appropriations. That does bring up, I think Debbie has a question, that does bring up something people brought up on grants themselves. The statute in 3625, I can't remember the exact section, but it says that all money that comes from the county treasury must be appropriated unless there is specific authority to not appropriate it. So the most common one is your recorder perpetuation. The statute for recorder perpetuation specifically says this money may be spent without appropriation. That's what we're talking about, specific authority. The commissary fund, this money may be spent without appropriation, okay? When you talk to your grant money, technically you're defaulting to that. All grant money should be appropriated. However, during an audit, we will not take exception for a federal grant or state grant that's advanced to you, like community corrections, you get 25% up front, if there is a specific departmental, or budget by classification that you are following. Okay? If you are spending county money first, if it's a local match that you have to do, or you're doing a payment and getting a reimbursement, you have to appropriate that money. That's county money. So there has to be appropriations. When we talked about community, I can't believe I'm doing this, community crossings yesterday, the local match needs an appropriation because it's local money. Okay, we won't, as Shannon said, we won't take exception if you're moving it and you're moving the appropriation with it. But if you didn't appropriate it and you're just transferring it as part of your local match, then within that grant fund, you need an appropriation approved by council for that project or projects that you're going to be paying it on. And I think there was some confusion on that, so I wanted to make sure that we were kind of clear. There's nothing wrong with appropriate. We are never going to take exception because you appropriate something unless statute says you can't. So if you try to force the recorder to get an appropriation, we would take exception to that. But if it's silent, there's nothing wrong with appropriating, but there are situations which are in an article that in the October bulletin, we reissued that, the funds that we do not feel need appropriation by statute, so there is a list of them in there. Okay. You're good? I forgot where I was. Okay, I'm almost done with this. That was really the important thing. The other thing with community corrections grants is that project income fund. And there's only one fund in the chart of accounts because originally there was only one grant, adult or community corrections for adult and juvenile. You will probably need a second one for juvenile community corrections. What we have discussed rather vigorously with Department of Corrections is the participation fees for probation users, for the deferral program, for the problem-solving courts that are set by statute continue to go to the user fee funds they always went to. If the grant has some additional costs that they're paying for and getting reimbursement, that user fee would have to go into a project income fund. With the way it's starting out, a lot of those grants don't have those things. When you're going to the problem-solving court, they're paying salaries or they're doing something else. But if they are doing a program, they're paying costs and getting reimbursement. I think to me, and I've been talking to Court Technology and the Clerks Association, I think one of the most confusing is drug and chemical testing, because you can have that coming from 5 or 6 different departments and you got to track who gets charged with what. So we are looking at ways to maybe facilitate that so it gets easier to track that kind of stuff, because if the grant pays for the drug fee for certain people, then any reimbursement from the grant or reimbursement from the people needs to go back into the project income fund for that. But it didn't change probation user fees. It didn't change problem-solving court participation fees or the deferral program. They continue to go exactly where they were sent in statute. That should not be a change for you. That clear? Sort of, maybe, partially? If you have any questions, be sure and call me. Just don't ask community crossings and community corrections on the same day. Make it 2 phone calls, or Lord knows what will happen. The last slide, and I'm not going to spend a lot of time on that, is on the Redevelopment Commission funds. I think we shocked some of the treasurers at their meeting conference in August. The Redevelopment Commission in, what was it? It was in 12 or 14. In 2014, the legislators changed the statute and they said, from now on, the treasurer for the Redevelopment Commission is the fiscal officer for the unit that established that redevelopment commission. So for a county, if your county has established a redevelopment commission, that is your auditor and treasurer that act together as you know, the funds need to be on your funds ledger, the accounts need to be on the cash book. We're not telling the treasurers that they have to pull those out of wherever they were originally. That may not have been banks they would have put them in, but if there's a bond ordinance that says it goes to the Bank of New York or something, we're not telling you have to close that out or ignore that trustee, but the claims need to be processed through the county the same way all claims are processed. When you do settlement, you do not send settlement money directly to the bank. You send it to the Redevelopment Commission Fund, and then you authorize through a claim the payment to the bank for debt, principal and interest payment, so that you're tracking it on your county records. The only difference is the commissioners don't approve these claims. The Redevelopment Commission approves those claims. But your annual report needs to have your beginning balances, receipts and disbursements, and ending balances of those Redevelopment Commission funds as part of your funds ledger. And to reconcile, those have to be included either in investments or somewhere on that cash book as money controlled by the county. The second question I've had before, you are not responsible for any redevelopment commissions of any city or town within your county. You're only responsible for your county funds. So if a city or town has a redevelopment commission, their clerk treasurer or controller is responsible for getting the money, the records on their ledger. Okay. Are there any questions about those?
Okay, so if we had to make this move, and we have several different projects, say a project is, and the project, the fees to manage it through the bank was less than what was, say the fees to manage the project was less than what was originally anticipated, so there's residual money at the end of the project when everything's paid off. Does that money revert to the general fund?
No.
Or does that money stay with the redevelopment commission?
That is Redevelopment Commission Fund, and it stays with them. They're really picky about holding on to their money. That is one of the funds. When you do an inter-fund loan, in order to do an inter-fund loan using a redevelopment commission, you got to jump through some hoops and you got to get some written signatures from your redevelopment commission. You can't just, your council can't just choose to use those. And that is specified in statute, that there are provisions for how to do those inter-fund loans if you're tapping those redevelopment commission funds. Yes, Debbie? They do, except that they're approved by the Redevelopment Commission. That's the only difference. Otherwise, it's still the same forms. It's still, you audit them, you initiate the payment, whether it's by check or an electronic funds transfer on a debt payment or something, that's still going to be initiated by you, approved by the treasurer. That's all the same.
Okay. One more question. They did bring up the fact that they had this money in was prior to July 2014, they earned interest. I mean, we're not talking about a huge amount of money, but they believe they should still get the interest.
Yes, they would.
Should?
Yes.
Okay. So
Redevelopment Commission funds, the interest on that does stay with their funds.
Okay, so we do have to keep that separate from other county funds as far as where it's housed bank-wise.
It needs to be in one of the Redevelopment Commission funds. Like, they can have an operating fund for where their interest can go, where it's not, because there is more money that the Redevelopment Commission can control than TIF money. A lot of them don't have anything else. They've never done anything but TIF, but they can get money from grants, they can get money from selling property, they can get money advanced by another fund in the county, that they can use that as for operating their redevelopment commission, their expenses. And so that's where that money would go, whatever fund they use for that.
Okay. All right. Thank you.
Okay. I'm going to let Shannon take over and do the first of the questions then. See what additional information you get for staying on Fridays.
It's like a bonus. So through our preliminary inquiry before, we got about 8 questions. That was something new that we were trying. They'd sent out and asked for questions in advance. So those are also included. They're the last 8 questions that we're going to go over. Altogether, we had about 38 questions from the box, the resource table, and from what we got in through emails. So I'm going to go over the first half of them, and then Lori will go over the other half of them. I'm going to read the question as we received it. So if it's not in proper English, it's not my fault. The Community Correction Department is wanting permission to not pay an invoice in 2017 from attending a conference for a county correction officer in 2016. The department is claiming funds are not available to pay the invoice. The county auditor is being asked to provide a letter stating, in essence, the invoice should not be paid because it violates an SOP for the county. First of all, if the department has a problem with the claim, it shouldn't even make it to the auditor's office. The department head needs to approve those claims. If they have a problem with it, they don't need to go to the auditor and say, I want you to tell them that we can't pay this. From our auditor's manual, we include an excerpt that says, one of the most important duties of the county auditor, as the title of the office implies, is to audit all claims and vouchers prior to their allowance and payment. It is not expected that the county auditor personally supervise the performance of all work or the delivery of all goods, but to ensure a claim or voucher is proper. It goes on to say, be sure the claim or voucher has been approved by the officer or department head receiving the goods or services. So that's one of the most important phrases there is it's not your job to determine whether it is an appropriate one from that department or not. It's their job. And if they don't think they should pay for it, then they shouldn't provide it to the auditor. Now, if it becomes a dispute or whatever, I mean, you can take it to your commissioners and have the discussion or whatever, but you don't need to provide a letter stating this to the department head who is refusing the claim to begin with. So, question 2, the state says I can only have one provider per county. So I'd like to know if I can use the money budgeted for one provider to split between 2 providers. They're talking about the community mental health centers. We did look up the statute, and we'll include all the statutory references in the bulletin because there's multiple ones, but it essentially does say a community mental health center. It doesn't provide for multiple ones. So if you have an issue with one, you know, you might try to work that out if you're going to change to a different one, but it doesn't provide for splitting that. It just says a. Yeah, I've got a few of them. It's IC 1229-2, and then there's -1, and also -1.2. And then 1229-3-6. That should provide most of the information that you need. And again, we'll post that information in our January bulletin as well. Question 3, we have established a special purpose lit for a jail project. We will get our first distribution in January of 2018. We have already incurred expenses for the project and have appropriated and paid the expenses from the rainy day fund. We want to repay the rainy day fund from the special purpose lit fund when funds are available. Is this permitted? Transfers from one fund to another fund typically are not permitted unless the statute allows for it. We weren't sure about the particular details of this, whether there was a bond issue or anything like that, but there were a couple of options. One of them would be to do a temporary loan to the special purpose lit fund that would be repaid when funds start to come in. The loan typically would need to be repaid by December 31st, but you could do an extension for 6 months that would allow them to get the money in and then repay the temporary loan. The other one is if there were bond proceeds, which my understanding is this was a multi-million-dollar jail project, so we were just guessing there's probably bond proceeds. You could repay the rainy day fund from the bond proceeds. Yes. Question 4, we have a health clinic in our county that is funded by both the health fund and federal grants. The director of the clinic refuses to break down the claims between local sources and grant funds. Instead, all the claims are submitted against the health fund as if all funding sources are commingled. They have now expended all of their appropriations, and I have refused to pay any claim that will cause an appropriation to be overexpended. How can I get the clinic director to cooperate? You're going to have to talk to your commissioners. This is one of those things where we just tell people, can't you all just get along? I don't know the situation and how long it's been going on, but I think when my understanding was the claims were coming in and everything was just coming out of one fund number. The director was just putting the one fund number on, so the auditor was processing the claim as it was coming in, as they should. And now they're telling them they have too much. Now they're wanting to say, well, part of that should have came out of federal funds. Well, the auditor doesn't know which fund it's supposed to come out of. It's at the direction. If you're having a problem with a department head or a director of a certain program and you're not getting anywhere with them, take it to your commissioners and let them know what the problem is and let them deal with that problem. Outside of that, we don't know what else to tell you. You can't make someone do something. So, take your issues to the commissioners and let them deal with it.
Your commissioners can set up policies for your county. The department heads are responsible for their budget. They submit that budget to the council, they get it approved. They are responsible to make sure that they have sufficient appropriation to be spending. They should be tracking that. It's not just all on you. So when they're telling you to take it out of a particular line, you're doing that. So when you come back to any department head and said, you're out of appropriation, they need to figure out where that's coming from. Do they need to go to the council and get additional appropriation? Do they need to correct entries that they have given to you in error, and they need to give you specific corrections, not tell you fix it? So, you need policies in the cases where you don't have control over that department, but the commissioner should. So there should be a county policy that's kind of upfront and lets everybody know going in what they're responsible for.
Yeah. The other question was, does anyone have an electronic version of the payroll voucher? I guess that would be a question maybe for the association if they know of anyone that has one. If you don't already have a software that you do your payroll through, most of those payroll software has a payroll voucher that it prints out, but if you're using manual processes, you might check with the association and see if they have anything electronically. Our office just prescribes the forms. We don't actually provide them, so you have to get them from a forms vendor or a software vendor. I know everyone thinks we keep track of everything that every county does, but unfortunately we don't have a spreadsheet that big. Question 6, an industry in a TIF district won an appeal due to a double assessment on their building. There's a sizable refund due, which the redevelopment has agreed to pay. Since the error is 100% on the increased assessed value, how should I handle this at settlement? The proper procedure, if the refund is under $100,000, would be to repay out of the general fund unappropriated and then repay the general fund from the appropriate taxing district. What I'm going to tell you, though, with settlement and this type of thing, I'm going to tell you to work with the Auditor of State's office to get this resolved. I don't know if the unit has already contacted them, but the best thing to do, I'm not sure how big this refund is to work with them and have them give you guidance on how to handle that refund. Question 7. Can we ask for a new legal description when a legal contains exception after exception? We have had as many as 10+ exceptions, and it is extremely difficult to plot. Can we require, if you have more than a certain number of exceptions, a new legal is required? Would we do this by ordinance? We can't answer that question. That's more of a legal question. You may check with the surveyor and your county attorney to determine whether that can be done. It's not something that we would have guidance on. Question 8, our county does not have a surveyor. The Drainage Board contracted with a surveyor for preliminary work on a potential project for an inactive drain. The cost was paid from the General Drain Improvement Fund and assigned to the drain. The project never went any further. There was no assessment, and there is no maintenance account or assessment to that drain. What do I do with the negative balance that I am carrying for the drain in the General Drain Improvement Fund? Well, since there's no assessment and there was no project, you can just adjust that particular drain out to the general funds of the General Drain Improvement, so it won't go against any fund. Since there's nothing going to be collected, you don't want to continue carrying that negative balance. It doesn't require moving any money because it was paid from the General Drain Improvement. You just, on that ledger, take it out of that drain and put it against the general. Our first deputies in the courthouse office, our first deputies in the courthouse office is exempt from overtime rules and regulations. Again, not a question for us. You want to contact the Department of Labor and make sure that you're complying with the Fair Labor Standards Act. I know Mitch had touched on this a little bit about the new, what they passed and then they put a stay on. So I'm not sure if this is related to that specific one, but right now there is a stay on what had passed with the overtime rules. But when it comes to those types of questions, you do want to contact the Department of Labor. Can the county council dictate the frequency of payroll, date of pay, and lag time from pay period to pay date? There's actually a statute, and it's Indiana Code 36-2-8-2 that's over the salary and wage periods and the manner of payment. And it says the county auditor and the county treasurer may pay salaries and wages to county officers and employees monthly, twice each month, every 2 weeks, or weekly. The manner of payment of salaries and wages under this section must be authorized by the legislative body of a county having a consolidated city or by the executive of any other county. So the commissioners would determine the frequency of the pay. The council would approve the salary ordinance. Question 11, are counties required to refund local lodging innkeepers or food and beverage taxes to tax-exempt organizations? If yes, or if recommended, what would be the process? We couldn't find anything that says that a tax-exempt organization would not have to pay the local lodging or food and beverage taxes. So I guess that's the answer. There is a bulletin on the Indiana Department of Revenue's website. It's the Department of Revenue Information Bulletin number 4, and it was issued in June of 2016, and it refers to tax-exempt statuses, but it primarily refers to federal agencies. And in that it says federal agencies are exempt from the food and beverage and the lodging, but other than that, there's no guidance on tax-exempt ones being exempt from that, or tax-exempt organizations being exempt from those taxes.
Talk about governmental agencies as well, and it also talks about, I think Darlie mentioned when she did her Department of Revenue presentation, when she talked specifically that a not-for-profit does not have to pay sales tax on the meeting room, but the people staying in the hotel have to pay that tax. So they can't come back to you and say, I should be exempt. They might be exempt for the meeting room, but if they're paying that tax or paying that room, even if they're being reimbursed by the not-for-profit, they're not exempt from paying that lodging tax. And that's in that bulletin.
Yeah.
Huh?
Did she
Oh,
show, did she have a chart or something?
Well, they're required to collect it and remit it. A not-for-profit or exempt organization, they're not exempt from charging and collecting that tax.
Yeah.
I just know that from my previous.
Okay, question 12. If a county employee works for the works the polls for an election, say 2 days per year, can they still be paid through AP, or do they have to be paid through payroll? County Bulletin, June 2016, has an article on this, but if they are a county employee and they're working the polls, and this is IRS guidelines, they're to be paid through payroll, whether it's 1 day or 2 day or no matter how many days. If they are not a county employee and they are expected to make more than $600 for the year, then they would need a W-2. Otherwise, they would be issued a 1099 and be paid through accounts payable. But definitely county workers, it runs through payroll. And like I said, the June 2016 bulletin has more information on the election workers, and you can even go to the IRS website and see what the actual IRS guidelines are if you just basically their search bar. You can actually even Google it and it comes up. So. Question 13, can tips be paid from the general fund and not included in the employee's per diem? If so, how does the employee document a cash tip, for example, for housekeeping after a hotel stay? First of all, it indicates a tip on top of a per diem, and we get a lot of people that confuse a per diem with actual reimbursement. With a per diem, they would just get a set amount for each day they're away. $13, $26, $30, whatever the county has established. If you're away, you get this. It doesn't matter how much tips you paid, how much you paid for your meals, any of that. Your per diem is your expenses per day from the allocated amount of your county. If they were doing actual reimbursement, you would reimburse them for the cost of their meal, and the tips part of that, we would typically say it's not, but if the county policy allows for a certain amount of a tip, and the county would determine what documentation needs to be provided for that. You know, Lori and I talked about this last night. It would be difficult for a cash tip for it to be very good documentation. So this would be up to the county's policy on whether they need to do it or not. I would say the county should address this one way or the other, though. If they say tips for meals or hotel are considered a personal expense and will not be reimbursed, it should say that in the policy. When it comes to travel policies, be as specific as possible. We run into a lot of problems, and when we see abuse, a lot of times it's in the travel policy. We always recommend, you know, if the county doesn't want to, if you're going to go with actual reimbursement, but the county says we don't want to pay them any more than $30 a meal, then you write that in your policy, because you'll have people that come back and they ate a $100 meal because the county's paying for it. It just says actual reimbursement. So it's important that that travel policy be as specific as possible. Movies, phone calls, any room charges, whether they will be reimbursed or not, and what kind of documentation has to be provided in order to get that reimbursement. That's the other problem we get is our policy says they have to provide this, but they don't have that, so do I have to reimburse them? Well, if your policy says they have to, then yes. If your policy was silent and just says you have to submit a claim, then you're leaving yourself open to have issues with those.
And I would say, as auditors, you want to have some input on that policy.
Yes.
So you make sure that documentation is required.
Question 14, how long do we have to keep records of council and commissioners' minutes? If you have questions about how long to retain something, you want to check with Indiana Archives and Records Administration. They have a records retention list on their website. If you don't see the document that you're looking for on the website, you can email them or call them and tell them what you have, and they'll tell you how long you have to retain it, whether you can destroy it. But before you destroy any records, you need to make sure that you're submitting to them a list of the records that you plan to destroy so that they can tell you whether you're able to destroy them or not. When it comes to board minutes, they're considered critical records due to their historical value. Therefore, and this one asks about recordings. If the recording is the only minutes, meaning you didn't write them and you're just keeping recordings of the minutes, then you would have to retain those pretty much forever, which would be difficult considering the media changes over the years. However, if the recordings were transcribed into the minutes, then the minutes would be the official document. So then the actual written minutes would be the ones that would need to be retained for pretty much ever. And then, like I said, you can get a retention schedule on the IARA website for any other records. Question 15. If we cannot find the ordinance to go with our home ruled funds, how should we handle making sure we have one? Well, if you can't find the ordinance, then you need to go to the commissioners and say, we have this fund and we don't have an ordinance. I have no idea what to do with it. You guys need to decide what we do with these funds. Either they'll establish a new ordinance that says what to do with them. If it's a dormant fund, then you'll just, close it out and do whatever the commissioners say. Generally, it would go to the general fund, but it just depends on the specifics of that fund. But if you can find no evidence there was ever an ordinance established, in order to keep that fund, you would need the commissioners to establish a new fund and pass it that says what to do with it, what revenues go into it, what happens to it. It could be a case where, and we do find this sometimes, people just start new funds without ordinances. So, and I know Lori talked about the home ruled chart of accounts. I would just say that is a very important thing. When we get newly elected come in, we get so many questions. They'll call us and say, I've got this fund, I don't know what I'm supposed to do with it. If you have that chart of accounts that stays there at the county, when a new person comes in, they can look up the ordinance, they can look up the purpose of the funds, rather than having to dig for it every time a new person comes into office. It just helps out everything, moving forward, and yourself. If you ever have any questions, you can go directly to the ordinance. You've got your purposes right there. It helps a lot. Question 16. There's a town that refuse and sewer liens, a portion of the liens were not accounted for properly on the tax distribution record. The liens were recorded and paid by the taxpayer, but at settlement, the money was not sent to the town in its entirety. As such, all of the liens have not been released, even though the liens were paid. A portion of the lien, designated as a penalty, ended up being paid to the county. How do we correct this situation? From my understanding, what had happened is, rather than in the liens, when the liens were put on, they were not coded as liens, they were coded as a penalty. So at settlement, they got distributed incorrectly. So now we have taxpayers, probably multiple taxpayers, that came in and paid their lien, and the town will not release the lien because the town has not received the money yet. The county still has the money somewhere. We're not sure how these penalties got distributed. We assume they got distributed out possibly to multiple taxing units. But at this point, the county is liable because they collected the tax. The county should pay the town the total amount of liens that was due to the town from the general fund, and then if they need to collect back from the taxing units for what got distributed, or if the county has all of the money, then that money would go back to the general fund to reimburse that. But the town does need to get that money in order for them to release those liens. Question 17. We send money to the economic development and it does not appear they are audited. Should they be audited? I think we looked into this particular county, and there is an economic development. There's a non-governmental organization. If you provide, and this is, it depends on what money you're giving them. If you're giving them money for services, you should have a contract with that economic development entity that says, you're going to provide me with the following services and we're going to provide you with the following compensation. If you're just providing a certain amount of support or grant through the county to that economic development, that gets reported as an E1 on the annual report that the not-for-profits have to report, and that's tracked through the system, and they could get an audit. It just depends on the amount of funding they receive and some other variables. We have got some complaints about not-for-profits and whatnot, and we pass that information on to our not-for-profit director who does analysis, but there's no guarantee that they will get an audit, but the information is reported. You can look up an E1 for any not-for-profit, and it will give some limited financial information on it. Also, the county, if you are providing general support, you're supposed to notify the not-for-profit entities that they are to file an E1 and provide them with the amount of support that you've given them. Question 18. The city purchased a golf course recently. However, there was only a first reading done before the purchase. This is a Parks and Recreation Department item that is supposed to be funded by $950,000 in bond through the Park District. What recourse do the taxpayers have in this case? I think our resource table did look into this, and they have a note that this particular unit, that there was a public hearing for the bonds. They went through the proper public hearing. The news report put purchase price of $600,000 for land. I did not find any board mention. We did forward this specific information to the data file for this specific unit, but it's hard to say when they say what is the taxpayer's recourse. The question, the board taking action outside the public meeting, that's something that you want to report to the state public access counselor if you don't think they followed the open doors laws and they didn't go through the proper procedures for something. You could also forward complaints to our office and we get them to the correct places.
There's a debt levy on this. You could check with DLGF because they're not going to prove that debt unless they follow procedures for issuing the debt.
Yeah.
So that would be another place a taxpayer could check.
Yeah. And I mean, it sounds like I said, the question was what recourse do the taxpayers have in this case? If there's a concern, the best thing to do is go to the public meetings, get on the agenda, state your problem. If you have a problem with the elected officials at the time, all you can do is bring it up to the public. They're elected. You can't do much about that other than point out the things that they're doing wrong, and hopefully that's considered during the next election. And make the reports to the proper agencies, notify us, the public access counselor, and let them look into it. Well, I'll let Lori finish the last half of the questions, but while she's walking up here, I'll go over the next one. In relation to Mark Mahan's presentation, do any other auditors or anyone from the State Board of Accounts have recommended processes for verifying the new current vendors that we pay are real and not false ones like the Misen case? We collect W-9s. Is there anything else we could or should be doing. Luckily, the people staffing our resource table are on our investigation side, so they know some of the things that you can do to verify that a vendor is correct. And they've given some tips here, so I'll read those. Potential steps may include, but aren't limited to, obtaining references, reviewing latest vendor financial statements, verification of insurance and or license information, previous complaint histories, like checking the BBB, the FTC, or other reporting agencies, company history, bios of management and key personnel, verifying legal and regulatory compliance, such as court record searches, reviewing company work sites, verifying physical location of the vendor. P.O. box is only address for vendor. That's kind of a key. Typically, you're going to have a physical address. Comparing vendor information to employee information. This is one thing that is a big indicator. You want to look at addresses, phone numbers, names, social security cards of any of your new vendors to make sure you don't have the last name of some of your employees. You don't have your employee's address on a company name. So those are things that you can look for as well. Contracts and accounts payable, employees showing special interest in a particular vendor. So if you have an employee or someone really pushing a vendor that you've never dealt with before, unusually large volume or dollar amounts of invoices, employees that deliver checks to vendors, you really don't want that happening, vendors that require immediate payment, and out-of-town vendor checks being cashed locally. The use of checklists and questionnaires could be used to help streamline this process. The one thing we want to say is internal controls. Again, if you have a new vendor in your purchasing department, you should have steps that say, before we accept a new vendor or before we issue a check to a new vendor, we're going to do the following steps. And that's going to be depended by each of the county, your resources, what is it that you guys want to do to make sure that it's verified, and who does it? Who's responsible for doing that? So assigning those duties and those procedures in your internal controls, rather than, you accept any vendor, you throw them in, they gave us a W-9, and now you're starting to write checks, and then you realize there's a pattern here and find out later they're not a real vendor. So putting those processes in place as part of your internal controls rather than a reactive process based on unusual activity or issues that you've had after you've already started paying them. Okay, any questions about anything I've went over before we switch? All right, I'll hand it over to Lori. I scrolled through the ones we wanted.
Okay. Okay, our county is wanting to pay a $400 stipend to Medicare-eligible employees for their health insurance. Is this allowable? How do we go about doing this? Per our attorney, this is allowable if we offer it as one of the options and not mandate it. During an audit, we're not going to take exception to the payment of the stipend as long as it's been included on the salary ordinance or in your personnel policy as part of the compensation of that person. It has to be included on the wages and on the W-2 potentially. You have to check with the IRS on that to make sure, because a stipend is an actual money payment, so it's additional compensation. So make sure that you're reporting it properly and that you have the authority to pay it, which is going to come from how your county policy is on payroll and compensation. Oh, they put an extra, the resource table also put a note, you might also want to verify that the stipend is allowable under the Affordable Health Care Act. I'm not sure how you do that. Okay, regarding the HEA 1031, how will comments and or findings be handled if the original problem started with an auditor who is no longer in office and the current auditor is not aware there was anything wrong or that there was a previous comment or finding? They may be continuing to do the same things based on what was being done as they took office. We are telling people upon taking office, and we will say it in our newly elected, one of the first things you might want to do is pull out the last audit report for your county and look at it. See what's in there, see what problems were identified so that you know going in what's going on with that. And if there were problems, work on corrective action. You're not going to be able to do it day one, but it's in your head. This needs to be corrected. Has it been corrected? What additional procedures should we put in place to correct this problem? And that's what our audit is going to be asking you when we come out. And you know, from our point of view, this repeat findings is not, again, we want resolution. We don't want to beat you up over it, but we also want it to continue year after year after year, and it's not getting resolved. So we're really looking for resolutions. If you're working and you've already got a plan in, it may still, that finding may end up being in the management letter instead of the report because you're already working on corrections. So it may not be a repeat finding. But I guarantee if you are continuing to do that, your county is continuing to do the same thing, that becomes a repeat finding, and it could be in that report, depending on the materiality and impactful nature of it. One thing I wanted to make clear for all of the new auditors, when we give that report, we list who was in term when, and we try to make sure in the comments that we're saying if it was the former auditor that did that as opposed to the current, so it's clear where the problem is. So we're not going to take something that happened under a former auditor and lay it completely on your responsibility. But if you're continuing to do that, then that potentially still could be your problem now because you're continuing to do that. So the best defense is to get out that last audit report. If you go to our website and you go to the county's page and you scroll down, it says search the audit report database. It's much more user-friendly than it used to be if you haven't been on it. You pull it up and you put the name of your county in as the unit, put the date you want to look at, 2016, whatever you know the last audit was, 2015, 2014, I hope they're not that old, and it will bring up the audit report so you can see it. For our drug-free fund, what is the proper process for paying out for services? What if the local coordinating council is an inactive entity per the Secretary of State records? There is an article in the July 2015 County Bulletin on page 3 about the drug-free community. And again, this is one where I sat down with Sonia Carrico, who is over at Indiana Criminal Justice Institute, and made sure we understood how this money is supposed to be overseen and processed. The drug-free community money is from a fee, but they oversee it like they would a grant because your advisory council is supposed to come up with a plan. That plan is submitted to your commissioners and it's submitted to the Indiana Criminal Justice Institute. They approve the plan, send that back, and then any contracts with any not-for-profits have to be, again, approved by your commissioners. That's still just an advisory commission. It's, as far as dispersing the money, you still follow your county policy. Commissioners have to approve those contracts, and then you should pay in compliance of those contracts. Your advisory committee does not have to be a not-for-profit. It's advisory. Now, if they are providing services, then there should be a contract between them and the county that says what they're doing. And if they have been dissolved as a not-for-profit, then your commissioners should certainly question whether they should have a contract with them. Why were they dissolved, you know, and that's for services. But as an advisory council, they don't need to be a not-for-profit. They are appointed as a board by the commissioners to develop this plan. So you really need to kind of tease it apart and see what you're actually looking at. For our Form 144, how do we show the salaries for part-time and hourly employees? Our salary ordinance is on a per-hour basis for these employees. Okay, the 144 is a budget form. It is not your salary form. It is a budget form. It is where your department heads are telling your council through you, this is how much money we're going to need to run our department next year. So they're going to have a line on there for this is what the department head's we want to receive, and so we need this appropriation for that. There's going to be a line that says our part-time employees, however many we have, we need this amount of the appropriation to cover that. Your salary ordinance is going to say part-time employees are paid so much an hour. So it's the appropriation and the salary ordinance. Does that make sense? Is that clear? Okay, so you don't need to list all of your potential part-time employees on the 144. You just need to show how much you need to cover those part-time, what appropriation you need to cover the part-time work. This question we have gotten a lot, and I'll tell you right up front, we don't have an answer. Our county's fuel provider has been charging us a fuel surtax. They advise that they are required to by state, and what we need to do is file a refund request. Why would our tax-exempt status not exempt us from the surtax? Can there be direction provided to vendors, a general DOR statement, to help them realize they don't have to charge? We have requested from Department of Revenue clarification on the new charges. These are not sales tax, which you're exempt from. These are new gasoline use taxes that have come into being, and we don't know. It's really not clear in the statute whether you're exempt from that or not. We have reached out to DOR. We have not gotten a response. We will reach out to them again to try to get some clarification. So all we can do from our position is say, if you think you paid something you're exempt from, submit a claim for a refund to DOR, and they will determine whether you are entitled to that or not. If they say you're not, then you might want to work with them to say, why are we requiring? It could be that your vendor is confused. I don't know. I'm not saying that because they could know exactly what they're doing and we're confused. So we need to get that clarified before we do further direction on that. Our county extension office has their own checking account. Ostensibly, they make purchases with this account and then submit a claim to the county for reimbursement to the account. The submitted claims have a vendor statements, not itemized, and a copy of the prepaid, not canceled, extension office check. We have asked other county auditors if this is how they do it in their counties, and they say no. Is this proper? So basically what they're saying is that the county extension office is getting an invoice for goods or services, writing a check, giving you a copy of the check they haven't mailed to anybody yet, and asking for reimbursement. No, that's not proper. Y'all know that, and whoever wrote this knows that too. The problem with the county extension is it's kind of a hybrid because it's a Purdue function and it's also a county function. There should be an arrangement between the county and Purdue on what expenses the county will pay. And we would certainly recommend that whatever expenses you pay directly to the vendor. I don't know who gave them the money for the, it should not be county money in that checking account. I'll tell you right now, that better be Purdue money. Because you should not be having county money in a checking account that the treasurer does not have control of. So we would say you would send that back and say, I need an itemized, if it's going to be a reimbursement, you need an itemized invoice and you need proof that it's been paid before you can reimburse it. But we would highly, highly recommend that they give you the invoice and let you pay the vendor directly if it is a county expense. That's something the county's supposed to pay. So our county extension office employees required to use mileage claim form 101 to be reimbursed for mileage from the general fund budget. Our resource table says yes. So that's the simplest answer, yes. If you are responsible for paying their mileage claims, they got to file the claim just like everybody else does to get reimbursement. If a county police officer works part-time for another entity, are they qualified for retirement through them for their part-time hours? Does that salary go to the county where they are full-time for retirement coverage? Note, the officers are concerned for the extra salary to go for they want retirement on it. I don't blame them, I would too. However, the difference is, what is your arrangement? What's your agreement with that other entity? Are you paying their salary and then getting reimbursed from the city or town, whatever task force they're on? Then yes, it's going to be part of their W-2 wages and it's going to be part of their pension calculation. Are they getting paid directly? They've just taken employment. It's not an agreement between you. They've taken part-time employment on their off-duty hours. Then they are the employee of that other unit. It's between that other unit and them whether they pay any pension on part-time. I don't know that they would pay on that. But it really depends on the agreement and how it's arranged. But if they are county employees on the county payroll, their county hours count for their pension. I think I said that too many times. Okay, back to weed and sewer liens. Is the auditor's office responsible for verifying the information on the lien, or do we just file it as is? I'm not quite sure on this because the recorder records the lien. The utility should be providing you a certification of the people they've put a lien on. You are to take that certification and add it to the tax duplicate. It's not your responsibility to verify that it matches the lien or anything else. That's the utilities department supposed to give you correct information. Are releases required from the taxing unit to file the lien? Yes. When the lien has been paid, you send them the money, and they should release that lien. But if they have not, then the customer needs to go back to the utility and talk to them about it, because they are responsible for doing the lien. Unless there is something that goes through and removes that lien, you know, like through tax sale or court order or something that just says all outstanding liens are removed. Can we charge the $20 collection fee, which is $15 certification fee and $5 service charge for weed liens? You're not going to like the answer. No. Weed assessments that are put on, and there's several statutes on that, and we'll put them in the bulletin. I'll give you one of them. Sewer liens are in the statute under 36-9-23-33. In that specific section of the statute, which only applies to sewer liens, it says you collect the $15 certification and the $5 service charge and what to do with it. When you go to, and there are several weed liens, but one of them is in 15-16-7-11, that's with the board, and then there's another one for the city and town, but they're very similar. You go to that statute and it says they give you a certified list. They don't even have to file a lien if they don't want to, but we recommend they do. But they give you a certified list of who has these weed assessments they have not paid or where they've mowed for them and now they're needing that money back. It gets put on the tax duplicate. There is nothing in that statute that says you get to collect any charges. So you'd have to change the statute. And for anything you're collecting, I mean, from our point of view, we don't really like all of these additional charges to your tax bill because it kind of gets out of hand and it's a lot of extra work for y'all. But if the statute says you have to do it, you have to do it. But you have to go to the individual statute that allows that amount to be placed on the tax bill to know exactly what to do with it. 36-9-23-33. Mm-hmm. Okay, community crossings. It's the road one. Keep it in your head. We started spending money, but we were awarded only a small portion of the grant application. We have since made adjustments to invoices, paid from the grant to pay from other funds because of the lesser award amount. Is this the correct way of handling the grant? Yes, it is. You put in an application for a certain amount for these projects, and NDOT said, well, you can have this, and they reduced it. So your matching portion is reduced. The only part that runs through your grant fund, the expenses, is going to be your matching portion and the actual grant amount you receive from NDOT and the invoices against those projects. If they took a project completely off, then that project has to be paid from other county funds that are appropriate for paying that. So yes, you would remove, if you started out putting those expenses in there and you've reached the limit of your local match, you're going to have to move those expenses to the appropriate fund. And our last question, which I think epitomizes some of our questions that Shannon and I get a lot. Who controls edit dollars? Council or commissioners? Please, 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 please tell your council and commissions to get along. They're supposed to work together to run your county in the most efficient and provide the best services possible. Together. Doesn't matter who's right, matters that it's done correctly. Edit money. Edit money has to be appropriated, so the council would do the appropriation. Edit money needs a capital improvement plan. Commissioners write the capital improvement plan. We've had this question, can a council refuse to fund it? I guess they could, but they can't use the money for anything else, so it's just going to sit there. So why would they? Now, you know under the new legislation, your edit money can be used for any legal purpose of the county. So the capital improvement plan is going to cover at least 75%. So if they have another purpose under there, or there's money that hasn't been allocated in that capital improvement plan, then the council can appropriate that for another legal purpose of the county. But they need to work together on this to make sure it's working. And you guys should not be in the middle of it. But you are, and you probably will be. Okay, are there any questions over any of that we've gone over? We're all just really, really tired. Well, Shannon and I, again, want to thank you. We really enjoy these conferences. We enjoy being with you. We enjoy talking to you. It's a lot of fun for us as well. We know you have a really stressful job, and there are times when I know we can't do everything that you need done because there are limits to what we're allowed to do, just as there are limits to what you are allowed to do. But we try as much as possible to be there for you. If you have questions, if you want to vent, you can call us up. Doesn't mean we'll have an answer, but we will listen, and we will say really, really bad things about whoever you're venting on if you want us to. And it won't go any farther than that.
I won't. Lori might.
Okay, I will. She'll be thinking it.
Registration form. Is there anyone who has not signed in yet? Raise your hand and I will bring it to you. Going once? Going twice? Are you sure? Okay.
Before we adjourn, I would like very much that you give a round of applause to your officers of your association who worked so hard to make this work. You know, Shannon and I work really hard on the agenda and try to get informative speakers and everything, but everything else is your association. So the meals, the hotel, all of the events, that's a lot of work. If you've never done it before, that's a lot of work. So thank you so much for having us. You got any questions? You got our phone numbers, you got our emails. Call us, we're there. And thank you.
Thank you.